Dr. Amanda here, and welcome to Amanda Loves to Audit and our series on audit evidence. Now we start into the 500 series of auditing standards, and everything in the 500s is about audit evidence. And it starts with this overarching standard, ASA 500, about what we should think about overall when it comes to collecting audit evidence. When we look at our table of contents, nothing unusual here. We're going to look at the objective of the standard, the definitions and the requirements. And as usual, I'm not going to go through too much of the application or explanatory material. At the end, however, I am going to talk a little bit about audit procedures and what is discussed in the explanatory material and how I think students can use that to design appropriate audit programs. As always, we have our conformity standard. So ISA 500 and ASA 500 are internationally aligned. So if you're studying the ISAs, then this video will be just as applicable to you as to the Australian students looking at the ASAs. When we dig into the standard, we start with the scope. And the scope is always, what is this standard about? So the scope actually says here, it's what exactly is audit evidence. So constitutes really means what exactly is audit evidence in the audit of our financial report. And it talks about what our responsibilities are, because we have to use our audit evidence, we have to design and perform audit procedures to be able to get evidence so that we can draw our reasonable conclusions in our auditor's opinion. Remember, I can't make an opinion without some form of evidence, or making an opinion without any evidence would certainly be a contravention of the auditing standards. So ASA 500 is quite broad and it applies to all evidence obtained during the audit. We have some very specific standards for specific circumstances. So 315 is about understanding the client at the planning stage. There was going to be a standard on solicitors' confirmations, on analytical procedures, but 500 is overarching. When we look at the objective, and I'll just zoom this in a tiny bit more, I need to design my procedures in such a way so that I get sufficient and appropriate evidence. And the question here becomes, well, what does it mean for evidence to be sufficient and appropriate? How much is sufficient and what is appropriate? So if we go down into our definitions, we'll see that sufficiency means the measure of the quantity of evidence. How much is really the key. Let me add that in here. The key here is how much evidence do I need to collect? And this is actually the area of my PhD where we looked at there were different ways that auditors decided whether they had enough evidence. I'll just move my whiteboard over a bit and we'll talk a little bit about ways in which auditors can collect evidence. So from my PhD, we found that one of the ways that auditors use to collect evidence is that they set a number. They set a number of items that they want to collect. And once they hit that number, then they say, I have sufficient and appropriate evidence. Another option is that they use a checklist. They have a very specific list of things that they might need to collect. Once they've collected everything on that checklist, and remember that checklist may be incomplete, they say that they've got sufficient and appropriate evidence. The third option, and the option that from my PhD we found was more appropriate to help auditors make sure they had sufficient evidence, was a mental model approach, where they used their understanding of the client to say, do we have enough? And we ask ourselves, well, does this make sense? Does the evidence make sense with what I know about the company? And if we have something that doesn't make sense, so if we have inconsistencies or gaps, we need to search more. All right. And when we actually went and we talked to a whole lot of different auditors and we looked at experts, people who were better able to implement this approach, the mental model, about making sense and searching for inconsistencies, and were not tied to a specific number of items, 20 or 50, came up with much more appropriate, sufficient and appropriate levels of audit evidence. Now, the mental model is going to be different for everyone, so that's really quite a tough approach, but it's one that we see most audit firms implementing in their training. This real focus on understanding the client, understanding the financials, understanding accounting, so that you know whether you have sufficient and appropriate evidence. All right, after that little interlude, let's go back here. So sufficiency is the question about how much evidence, and really that's also the question like how long is a piece of string. So how much will depend on potentially the risks of material misstatements that you're expecting within the client. Now the standard says sufficient and appropriate. So what is going to be appropriate evidence? Well, appropriate evidence means it's the right quality, it's relevant, it's reliable, it's using the right mix of procedures to gather that audit evidence. So really, appropriate comes down to designing the right audit procedures. And that takes experience. This is one of the hardest things for students to get a handle on, is designing the right audit procedures. And there's no absolutely 100% foolproof answer as to how much is sufficient and how much is appropriate. The key for auditors is that they have to use their professional judgment. All right, and that only comes from experience and practice and understanding the profession. So that's the objective. It says, oh, we have to go out and make sure we collect sufficient and appropriate evidence, and that's reinforced here in the requirements. So remember, the requirements is where we start the actual bits of what we have to do, and the auditor shall design and perform audit procedures that are appropriate for the circumstances of obtaining sufficient and appropriate evidence. So we have to consider the relevance and reliability of information. Where does it come from? Is it the right information for the right question? So the relevance one, I always like to think of as, is the evidence fit for its purpose? So if you want to check whether a company owns a piece of land, will that piece of evidence actually tell you? And that comes down to the design of the right procedure. Is that information reliable? Can I rely on it so that I can give my opinion? Now, if we do decide to use experts, we have to consider, well, is that expert appropriate? Can they make the right decision? I need to evaluate the work. If management have used an expert, I might need to even engage an expert of my own. And we have ASAs in the 600s that tell us about how we need to select our experts, because we might not want to trust the expert of client's management because there is the possibility of some bias. There's definitely the possibility that management's expert is telling management exactly what they want to hear and what they're paying them for. If we go on to the next part, when using information produced by the entity, I shall evaluate whether the information is sufficiently reliable, including the accuracy and the completeness of that information, and whether it's sufficiently precise and detailed. Now, how do we do that? We're going to do that by making sure that we understand the systems of internal control at our clients, because the systems of internal control are the systems that actually collect and capture a lot of information used and collected by the clients. So if we have a situation where control risk is high, systems are fairly poor, I try and minimize information that I would use just from inside the company. I might even want to think about trying to correlate that information or confirm that information with someone else. Now, how do we go about selecting evidence? Well, I actually have a standard about when designing tests of controls and tests of details, I should select items that are effective in meeting the purpose of that audit procedure. So that really means that when I'm sampling, and we're going to look at the sampling standard a little bit later on, I'm selecting a sample in an appropriate manner, and we're going to look at that in ASA 530. Now, what happens if I have information that is inconsistent or doubts the reliability of audit evidence? And inconsistency is a key one. If you find information where you've got two pieces of information from within the client that tell a different story, You cannot simply ignore that it exists. So it says if evidence from one source is inconsistent with evidence we get from somewhere else, or we think that there's doubts over reliability, potentially because of poor internal controls, potentially because of some other, you might have a fraud risk, that might mean that evidence might be less reliable, then what I need to do is consider whether I need to change my audit procedures to resolve the inconsistency and find out the heart of the matter. Because this bit here, consider the effect and resolve the matter. If there's inconsistencies, why are there inconsistencies? Is that because of fraud? Is it because people are trying to hide something and that's why we're seeing inconsistencies in the evidence? When I'm talking to my students, my key is always, when you're looking at evidence, you ask yourself, does this make sense? All right, does this make sense? This is the mental model approach. All right, does this match with everything we know about the company? How does this fit with their risk profile and what we found out about them in the inherent risks? So we have to go collect evidence to make sure that we can give our audit opinion. Now I wanted to talk briefly about the audit methods, the methods that are included in ASA 500 about how to collect evidence. And these are actually from ASA 500, but they're actually in the explanatory paragraphs A7 to A25 at the back. And A7 and A20 through to A25 say we have inspection, observation, external confirmation, recalculation, reperformance, analytical procedures, and inquiry. And I have absolutely no qualms with either of these, but I always like to give these a little bit more depth and detail. So when I talk to my students, I talk about inspection in two ways. I talk about inspection of documents, all right, and then I also talk about inspection of tangible assets. Now you might be wondering why I don't just say assets, because remember we have intangible assets. So when I talk about inspection, I break this down further into inspection of documents and inspection of tangible assets. Observation is just watching people. Confirmation, I'll talk about that in a separate standard. Recalculation is simply redoing the maths. Now reperformance is an interesting standard because reperformance is really only applies to internal controls testing, because you're reperforming a procedure related to an internal control. So we tend not to use reperformance too much unless it's with internal controls. Analytical procedures, ratios, anything we know a lot about that. Inquiry is talking to people, but I want to add 2 extra procedures to our list. And those extra procedures are these 2 here. Vouching and tracing. And these are really important because vouching is at the end of the transaction. So you go from the end of the transaction to the start. So you work backwards. All right. And the thing with vouching is that it's a great test for existence and occurrence. Then we also have tracing. And tracing is when you go from the start of the transaction to the end. And tracing is a really great procedure to help us with completeness. So they have different purposes, and the reason I include these is because they, I guess, are part of inspection, but it's a very specific type of inspection. And so when we vouch or when we trace, we're giving very clear instructions on how to do the audit. Now, I've talked about in other videos about my 4 rules for audit procedures. So I thought I'd add these to the very end, and then I'll link you to some other videos where I go about it in more detail. I have 4 really simple procedures, or 4 really simple rules, I guess they are. Rule number 1 is always use the correct audit term. This is because we're part of a profession, right? We don't say, I'll just test stuff. We say, okay, I'm going to vouch, I'm going to trace, I'm going to do an analytical procedure. So that proves to your assessor or your marker or the person that you're working for, you know the profession. My second point is always use the client names for things. Client names and terms. And this is because clients use different names for different things, even in the same industries. One company might call this a packing slip, others might call it a bill of lading or a shipping document. If you don't give clients the exact name of what you're asking for, they won't give it to you. They'll say, oh, we don't have that. Oh, I don't have that document. So always use the client names. That's customizing our audit. Number 3 is be specific. All right. Your procedure should be detailed enough for someone else to follow. This is really, really critical. And then number 4, the procedure needs to be fit for purpose. So if you are testing an internal control, you need to make sure the procedure is about testing the internal control. If you're testing the occurrence of sales, you need to be using vouching and not tracing. So these are my 4 basic rules. I'll link to some other videos where you can find out more and see examples of how I implement this. So thanks for listening. I'm glad to be back. I'm sorry we had a little bit of a break there. I've been a little bit unwell with a bad cough. You can probably hear I'm still a bit croaky. If you like the video, we'd love for you to give us a thumbs up. If you have any questions, please leave them in the comments and consider subscribing. I will chat to you about auditing standards next time.